sidelines waiting for the market to drop. Well, it's probably going to drop because that's just the nature of supply and demand. Money, wherever the money's chasing is what is going to go up in value. If a lot of money's chasing real estate, then real estate goes up in value. If money's chasing the stock market or Bitcoin or whatever it is, that's what happens. But a lot of you are just sitting on the sidelines, not getting in the game at all. Well, I'm going to give you an idea of something else you could do. One of the reasons we like Berkshire Hathaway so much is that it works kind of like the S&P 500 in that there is a lot of companies that they invest in, but they've also, I mean, the S&P 500 over the last 5 years has made about 12.5% per year. Over that same time frame, Berkshire Hathaway over the last 5% has made around 14.5% per year. So if you just had your money in Berkshire Hathaway, it's going to go up a little bit faster over those last 5 years. Now, sometimes the S&P does better, sometimes Berkshire does, but both of those are great things to have in your portfolio. The big thing is a lot of people are saying, well, I don't dare be in the market at all, so I'm going to be all in cash. Well, you can try and time the market and figure that out. But here's the problem. Here's the problem is that what kind of rate of return are you getting on your money? When you sit in cash, that equals a 0% rate of return. If you're sitting in the bank, that's probably 0.5%. It's not any better. If you do bonds, you can probably make 2 to 3%. If you put it in equities, if you put it in stock, you can make minus, depending on the year, you can make minus 5% to a plus 14%. If you're doing an index or BRK, it's probably going to be on average a little bit higher here. You are getting on a roller coaster. Now, some of you do not want to get on the roller coaster. When I was a kid, all we did is get on the roller coaster. And the problem with the roller coaster is that it's going to go up, 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 and then it's going to go down, down, down. They want to give you that thrill ride. Okay, it's up, 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 down, 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 boom, boom, whatever it is. Now, the one thing you have to do if you're getting on a roller coaster is put on your seat belt. Okay. If you were riding the roller coaster, put on your seatbelt and hold on. Don't get off. And some people are they're trying to sell it right here and buy it back here, sell it right here and buy whatever it is. And some people are good at that. I'm not. And the vast majority of people are not. Four ways to invest. In step 4, we just want you to do Berkshire Hathaway and the S&P 500. Why? Because you don't have time to do anything else. We just want you to get started there. But in step number 7, it's okay to pick and choose. It's okay to do some mutual funds. I do. It's okay to do the S&P and it's okay to do Berkshire. Okay, because you got some time, you got some time to study it. But if you are on getting a 0% rate of return or a 3% rate of return, you're not on the roller coaster. You're just going like this. It's steady and it's straight, but you're going to get about a 3% rate of return all the way to this, which is a 0% rate of return. And if inflation is at 3% to 5%, you're just barely breaking even over here. You're not getting ahead. Your money's not getting ahead because inflation is at 3% or 5%. The US government needs a 3% inflation to make their math work, okay, which is just crazy. So if you're going to leave it in cash and in bonds and stuff like that, that's where you're going to be. If you put it in the S&P 5, if you put it into crypto, that roller coaster is going to be really crazy. But if you put it into something like the S&P, well, the S&P is going to be a roller coaster, but it's not going to be nearly as big because there's 500 companies. Okay. Now, one of the things that I like about Berkshire Hathaway is that of the whole portfolio, 35% of it is in cash. Now, he is waiting for great bargains. He loves to buy wonderful companies at wonderful prices. Okay, so 35% of that is sitting in cash and treasuries, making about 5%. Okay, 40% are businesses that they own. These are businesses that they own, that they've acquired. And then 25% is stock, which are portions of a business. So the reason I like BRK so much is that if it's part of your portfolio, if you're worried about taking advantage of the dip, okay, because supply and demand. Berkshire Hathaway has had a great company for decades, but sometimes the stock goes down dramatically because more people are selling than buying. They're going after the newest trend. They're chasing real estate. They're chasing crypto or whatever it is. Supply and demand make stuff go up or down. So if you're waiting over here for the dip, now you can, I'm not telling you what to do with your money, but if you're waiting for the dip, you think the whole thing's going to dip and it's going to go down to here. Well, you can sit in cash for a while. I'm sitting on a whole bunch of cash right now because I think we're going to have kind of a big dip right there. Okay. But I also have a whole bunch of Berkshire Hathaway because he's sitting on a whole bunch of cash and they know great companies to buy and to invest in. And so that's why we like BRK so much. And again, over the last 5 years, it's produced about a 14.5% rate of return. Over the last 5 years, the S&P is about 12.5. Okay. But bonds, loans are probably 3%, and your savings and your checking equal probably 0 to 0.05, not much. All right. So again, you look at your asset allocation, you look at your money where it is, and you go to the amusement park. And when I was a kid, I used to ride the roller coaster. My little 8-year-old niece, or excuse me, granddaughter, she was crying at the last big amusement park we went because she wasn't tall enough to ride the big crazy rides. I'm not getting on that stuff anymore. I get a scooter because I've had 2 back surgeries. My legs hurt a lot, and I ride the scooter. I'm not getting on that stuff. But when I was younger, I did. The key is to leave your seatbelt on, and so you don't get thrown out. And don't go gamble, and don't invest with your neighbor across the street that has some crazy idea of how to get rich quick that has no idea how to do it. You only invest in people that are doing it. And the 500 biggest companies in America are huge. They're big and they have a moat and they know what they're doing and they take advantage of trends. Berkshire Hathaway, same. And again, I'm not telling you what to do with your money. I'm just trying to tell you how to be able to survive the ups and downs because of supply and demand. And once you understand the game, you see the patterns and you go, oh, I get the pattern. I see what's going on here. Thanks for watching, everybody. Make a difference, make it happen. Remember that every life is precious. Thanks for watching.